So, here's a wild one for you. What if a company announced a record-shattering $81 billion quarter and then immediately lost over $350 billion in value? Well, that's not a hypothetical. That's exactly what happened at Microsoft. Today, we're going to decode this paradox and figure out what on earth Wall Street saw that the rest of us missed.
I mean, just look at these two numbers. They don't even seem like they belong on the same planet. On the left, you got this absolutely spectacular revenue number, $81.3 billion. A huge win. But on the right, the brutal market reaction. A $357 billion wipeout. We're talking their worst single day since 2020. It just makes no sense.
And that really brings us to the core mystery we are trying to solve here. What did the market see? What was hiding in the fine print of that earnings report that could possibly trigger such a colossal sell-off? To figure it out, we've got to look at both sides of this story.
So first, let's dive into the bull case. All the reasons why, on the surface, Microsoft looks like an absolutely unstoppable AI juggernaut. This is the story of a company just firing on all cylinders.
It all starts with this insane number, $625 billion. That's their RPO, which is, just a fancy corporate term for future revenue that's already locked in. It's money they're basically guaranteed to make. And seeing that figure more than double in a single year, that is a massive signal of incredible long-term demand.
So what's the engine driving all that? It's Azure. Microsoft's cloud platform grew by a mind-blowing 39%. Now, to put that into perspective, that is more than double the growth rate of its biggest rival, Amazon Web Services. Azure is the foundation for the whole AI revolution, and right now Microsoft is just plain dominating.
And listen, they're proving they can actually sell AI software, not just the plumbing for it. GitHub Copilot, their AI coding assistant, has already rocketed to 4.7 million paid subscribers. This isn't just some far-off promise of AI. This is a real, super successful product making them real money right now.
And the really crucial part of their strategy is that it goes way beyond just simple chatbots. They are pushing hard into what's called Agentic AI. Okay, so think of it this way. Instead of just asking a chatbox a question, imagine an AI that's like a digital colleague, one that can automate an entire financial report for you from start to finish. That is a massive leap in value, and that's the future Microsoft is building. So, with all that incredible news, we're back to our mystery. Why the historic stock drop? Well, this is where the story takes a sharp turn. Let's dig into the bear case and look at the unsettling fine print and the hidden risks that totally spooked investors. This quote here just nails the change in mood. The initial, visionary excitement around AI, that's over. The honeymoon is done. Now investors are pulling out the magnifying glass for a full-on forensic scrutiny, digging into the real costs, the risks, and all the long-term threats.
And the first giant red flag was this number, $37.5 billion in capital expenditure in a single quarter. That's what they're spending to build all the data centers and buy the chips to power this AI future. A 66% jump from last year is just astronomical, and it's fueling fears of a CapEx chasm, where the cost of building this future is growing way faster than the money it brings in.
And this chart illustrates the second huge risk. Remember that massive $625 billion backlog we talked about? Well, it turns out that almost half of it, 45%, is tied to a single partner, OpenAI. And oh, by the way, that's a partner that is projected to lose $14 billion this year. That is a gigantic, massive concentration risk. Okay, and then you've got some, let's call it creative accounting. Microsoft says the GPUs that power all this AI, well, they'll last for 6 years. But if you talk to most analysts, they'll tell you that with technology moving this fast, the real useful lifespan of these chips is more like 1 to 3 years max. So what's the result of that? Well, by spreading that cost out over a much longer period, Microsoft's expenses look smaller and their profits look bigger. This little mismatch could be creating what some are calling a $6.5 billion accounting subsidy every year, essentially making their earnings look a lot healthier than they might actually be. And finally, we have what might be the biggest, most existential threat of all, seat compression. Think about it. As this agentic AI gets smarter and smarter, what happens to Microsoft's core business, which for decades has been selling software licenses to human workers? If one AI agent can do the work of 10 people, a company might just cut 90% of its Office licenses. This could be a Software-mageddon for their entire business model. So, how does this epic battle between the bulls and the bears actually play out in the real world? Well, it's happening right now inside each of Microsoft's three main business divisions.
Let's start with Intelligent Cloud, the engine room. You see that spectacular growth, right? But then look at the minus column. Margins are actually shrinking because costs exploded by 44%. Even worse, they're hitting real-world walls. Half of their planned data centers are facing delays because they literally cannot get enough electricity from the power grid to run them.
Over in their productivity division, Office, Microsoft 365, revenue still looks great. But that growth is coming from hiking prices on existing customers, not from adding new ones. This is the part of the business that is most vulnerable to that seat compression threat, and Microsoft knows it. That's why they are scrambling to pivot to a whole new agent mode pricing model.
And you can't forget about the classic Windows business. It is now facing a brand new threat. Apple just launched the MacBook Neo. It is priced to compete head-to-head with Windows laptops, and it's reportedly 3 times faster for AI tasks you run on the device itself. That's a direct assault on a core pillar of Microsoft's empire, plain and simple. So when you put all these pieces together, you start to see a company that is truly at a crossroads. Microsoft is making this monumental, high-stakes bet on an AI-powered future. But that bet is coming with equally monumental risks.
The market has basically reacted by hitting a giant reset button on how it values the company. If you look at key metrics like the price-to-earnings ratio, they're now way below their 5-year average. In plain English, the stock has gotten cheaper because investors are now pricing in all this new risk and uncertainty. And this really gets us to the absolute heart of the matter. This is the fundamental bet. It's a race. Can Microsoft build a whole new business model based on the value of these AI agents? And can they do it faster than the threat of seat compression completely eats away their classic, per-user software business? Which leaves us with one final, massive question. Is Microsoft actually building the future of computing for the entire world, or is it just digging a CapEx chasm so deep, so expensive, that even a titan like Microsoft might not be able to climb out? I guess the next 18 months or so are going to give us the answer.